Hey, welcome back to the channel everyone. On today's video, we're going to be looking at utility stocks and just how poorly they've done year to date, but specifically in the last month. I'm going to be focusing this video on the last month in general because that's when a lot of the pain has been inflicted. Just as a comparison, I've got a couple of the indices on the screen right now so we can see how they've done in the last 1 month. So just quickly, the Dow is down 5.2, the S&P 5.9, and the S&P is held up much better at only being down 1.3%. Okay, so now let's just compare this to the utility sector. And when I say utility sector, I'm going to be focusing on the top quality utility stocks that are investable within Canada that has, further reaching investments within the States and other countries. So here's the best in breed, in my opinion. We're looking at Emera, Algonquin Power, Fortis, and Brookfield Renewables. They all have their own little edge and advantages and disadvantages, but over the last month we can just see here Emera's been down 13%, Algonquin down 17%, Fortis down 13%, and Brookfield down 12%. Now when we compare it with the performance of the indices that we just took a look at, you can see that these have really underperformed. These stocks are getting hammered, and a lot of you people watching this video right now are invested in these companies and you want to know why. So I'm just going to give you my opinion on why they're down to this level, and if they're okay and safe to invest at right now. First of all, if you have a large investments in these companies like I do, relax. Everything is going to be fine, 100% fine. There's going to be some short-term pain, but if you're an investor, they really shouldn't matter all that much to you guys. You should be in it for the long run. These are not companies that you put some money in for 6 months and try to turn a profit. These are long-term holders. They're not going to, they're not going to rocket to the moon for you. They are going to give you slow and steady dividend raises. All these companies actually. Fortis literally just increased. Emera increased the other day. Algonquin and Brookfield will be coming up next. So every company on this list is raising their dividend every year. These are not companies you need to be concerned about. They are slowly growing. They're fine. Don't worry about it. Now, a big reason why our utility stocks are in the red so much this year are because they are a risk-on asset, all right? Meaning that any money you invest in these companies, there is a certain degree of risk to them, even though they are considered to be a safer asset class. And, traditionally they have very low beta as compared to the rest of the market. However, if we take a look at the GIC rates, these are a non-risk investment that you can make. This is just Scotiabank's rates. They're going to vary, but if you look here on a 13-month term, you can put your money in and it's guaranteed to give you 4.5%. Okay, so the yield on Fortis and Emera are both under 4.5%. Algonquin is a little bit higher. However, here's a good example of the rates keep on raising. People are getting scared. They want safety. They want a level, just a safety net, a level of carefreeness to their investments. This is going to be it for them. They don't know what's going to happen in the market. They rather put their money in something like this. So institutional investors are getting out of traditional safe assets like utilities and banks, even to a certain extent, and putting their money into the GIC rates. So there's part of the answer for you right there. And if you haven't thought about it yet, maybe you want to put a little bit of money in a GIC too. I mean, it is a pretty good rate. It's not something that I'm going to be doing because I'm going to keep buying up utility companies at these depressed rates because in the long term, even 3 to 5 years, you're not going to see these low prices again. It's not going to happen unless we get into more economic trouble down the road. But I happen to be an optimist, and I think things are going to be looking at for the future. But we should look at the other reason for our utility stocks going down so much. The other reason is the Bank of Canada. Now, they've mentioned that they're going to be raising interest rates, but the problem is vague language. Now, the Bank of Canada doesn't just come out and say, hey, we're going to raise it until we get to 3.5%. Then we're going to wait and see, guys. We're going to take it easy. They don't say anything like that. They just say things like, we're still fighting inflation, guys. We're not sure how long this is going to last. It's obviously not transitory anymore, but we're going to have to keep rising. And, we'll wait and see. We're going to look at different numbers, blah, blah, blah. They don't want to tell people exactly what they're going to do because that would really impact the market in a positive or negative sentiment. they do keep things loose. They do keep things just ultra vague. If you ever have read an inflation report from the Bank of Canada, their interest rate rising reports are just, yeah, they're just drudgery if you really read a lot into it. But this is the reason, guys. The Bank of Canada has a big influence on the Canadian economy and utility companies in general. Now, utility companies tend to have a large amount of debt. And people perceive this to be very troublesome when they see interest rates rise, because they associate the utilities company's debt load with higher interest rates. Now, that is true to an extent. However, the debt is usually secured at a fixed rate for a longer period of time, 5 years, 10 years, etc. So the rates aren't going to rise so much today, but later down the road it will affect things. And when you have the amount of debt that these companies do, it does play a big influence later down the line, but it's not going to be seen right away in the present day in the coming quarters. However, with inflation being the way it is tough for utility companies as well, because inflation and interest rate rises, they can be a good thing for utility companies, but only if they happen steady and slowly. They need a gradual increase. If everything happens quickly in the manner that it is happening currently, it can be detrimental, because the utility companies cannot dictate the price that they charge the end consumer. They need to apply to governing boards and have their new rate increases improved. So they need to ask to raise it 10 cents a kilowatt, for example, and the governing board might say, well, your costs are X and X, as we can see on your financial sheets, therefore you can only raise it 8 cents. Okay, so this has a big impact. All in all, I'm buying utility stocks right now. I gave you a quick sum up of why they've been falling so much. I actually invested fairly heavily recently. I'm down, over 10% on my investment. But like I said, I think these are great prices to get in at. I'm not worried about it. I feel really good about the future. Short term, we're going to see some pain, but it just means bigger and bigger compounding for later down the road, guys. If I missed anything, let me know in the comments. But I feel really good right now. I'm really excited about the market right now. I'm buying everything I can get my hands on. I hope you guys are too. I hope you feel the same way. But if you don't, that's okay. And maybe I'm wrong. Tell me your reasons for not investing or putting all your money into GICs and heading for the safe hills. I'll see you in the next video, guys. Take care. Happy investing.